Rip Squad? Welcome back. Ripper is here to kind of feed you the business. This video is going to explain the stock to flow model. I want you guys to understand it a little bit better. You don't really hear about this stuff during the bull market. You don't really hear about it really ever unless bad things are happening. Why? Because it is a large indicator of where we are at, and it gives you a really good understanding, like I said in the past videos, of how to keep your emotions in check and kind of know where you are at a long-term, basis. So, like my past video, if you saw it, the first video on the channel discussing where Bitcoin is at, we're still consolidating. We're still consolidating in between the 42 mark and the 30 mark. We had a nice little drop down the other day, a nice little shakeout real quick. Bam, back up to 36 as we are now. So what I really want to explain to you quickly is the stock to flow model and why I think this is the bottom. And if we do breach where we are at or below the 30 or the 28 range like you see here, it likely will only be for a couple weeks and won't be for long. So I'll explain why and what I think about the stock to flow model and why I believe it is a very large indicator in understanding the market at this time. So first of all, I'll explain Plan B. There's this guy, Plan B, has been around for a while. He's basically a statistician. He's in economics. He kind of understands these things, and you want to understand where Bitcoin stood in the commodity space. So when it comes to that, the stocks to flow model basically compares, these important commodities or stores of value, as in gold, silver, palladium, and platinum. So really, the stock to flow model helps to value scarce assets and measures the scarcity of an asset. So like I said, that involves gold, silver, platinum, Bitcoin. It really takes the rate at which they are being mined or created. So the way I look at this compared to Bitcoin, so as we know, as Bitcoin is being mined to produce the coins, to produce the asset, it's very similar to you going out west and digging and chopping and churning and panning for gold. It's the exact same thing. So the rate at which that we find that asset is the rate that we are rated on the stock to flow model. So the more that you produce it, the slower that production becomes, which then makes that asset more scarce. So with Bitcoin, as we know, with 21 million in circulation, 10 years ago at the inception of it, it was super easy to mine. Now you have to have these crazy computers and crazy renewable resources to be able to mine it. Why? Because it's become harder. And as we get to, let's say we get to the point where we mine 18 million and there's 3 million left, Bitcoin becomes more scarce and therefore more valuable. Just like gold has become more valuable over time, over the last 100 years at that rate. So it's very similar to that. I want you to think of it that way. So yeah, the more that we go for it, the more value it becomes. And there's also, to the stock to flow model, there is a fact of a network effect. So, which means the more popular it becomes, the more people want it, which then in turn makes it more valuable as well. So this chart I'm showing you here basically shows you, so gold and silver are considered monetary goods at 62 and 22. That means at the rate at which gold is at, it took 62 years for it to get to that point, 22 for silver. At this rate where Bitcoin is at, it kind of fluctuates on the daily because of how volatile it is, but it's sticking between the 25 to 30 mark, which means it is considered a valuable and monetary good, just like gold is. Over time, it continues to increase as we continue to mine it, or as we continue to pan for gold, it becomes more valuable because the asset becomes less of what we knew of. Okay? Does that make sense? I hope so. And the thing is, the reason why the stock to flow model has started to become, come out and about is, we're hitting this point in the market where everyone's kind of scared. Retail sellers are freaking out. So it's important to understand where we're at emotion-wise and where we think we are. So the stock to flow model here, I'll show you this. Plan B also posted this on Twitter. This guy's been going around since, I think this original blog post was in 2019 explaining this. He posted, his model here. And the important aspect of this stock to flow model is the fact that even after black swan events, we've never breached the typical model here in blue, in light blue, and a little bit lighter blue. We've never dropped below that ever since the inception of Bitcoin back here in 2010, as you can see back here, as its rise. We've never broke the stock to flow model. Like I said before, history absolutely repeats itself. Yes, and through all the statistics and mathematics that go into this model, there is, Plan B had said there's likelihood of it breaking it only for a couple weeks, never more than a couple months. So that's why I say when we get back to the chart over here, sure, where we're at, even through all these black swan events, COVID, 2019 bottom, COVID, the Elon FUD, all this bullshit that's happening, we still have yet to break the model, which is why I think we are at that bottom and will continue to rise, yet consolidate, okay? And then another thing that I really want to point out, what you'll type, if you type in stock to flow model, you will likely get this chart. It's pretty tough to find this chart. I had to go straight to Plan B to find this chart, but that's why this chart's coming up more often than not. I think it's important in this, and this is just another indicator. It's basically the same model, just a different setup, okay? A reason why I think we're still at that point is now you look at all these points when we're in a bear market, and we're basically in the blue, bear market in the blue. But as we consolidate and we do slowly rise, look, we're in the blue, we're in a bear market, we're in the blue, we're in the bear market, we're in the blue, we're in the bear market. As you can see, there's still slow rise, but there's not as much volatility as we're used to. And that's the thing, everyone now that we've gotten in, and a lot of people have just gotten in, they've gotten into the top at 60K, and now they're freaking out, everyone's selling their bags for a 50% loss, okay? That's the problem. We're still, the other indicator that I've noticed that I haven't really seen anyone point out is we're still in the yellow on this indicator, on the next halving index, okay? So if you look over here, we don't really hit a bear market till we're in the blue. And we're still in the yellow. We still have yet to go down the green. We still have yet to go down the blue. Now, if we go down the blue, which is what everyone keeps mentioning, is if we hit that $20,000 mark, we'll likely be in a blue and we'll likely be in a bear market unless something crazy happens. But guess what? Institutions will absolutely bag it if it gets to a blue. So this is why I think the stock to flow model stays true to the history as it repeats itself. Another thing to notice is the model variance down here. When it's down in green, that means it is a good time to buy. That means Bitcoin is undervalued. That means buy it now because it will go higher. So look at us. We're basically at a support line down here, all the way at the green. If I were to be able to draw a line right here, we'd be right there at a support line, which means we don't have a whole lot. So if you want, buy now. Everyone wants to buy when it's hot, when it's at 60 grand, but everyone's scared as hell to buy now. Why? Couldn't tell you, because you don't understand the emotions of being a trader and being an investor, especially in a volatile market in a currency like crypto. I will be creating a video a little bit later here that explains what cryptocurrency is for beginners and the way to look at it. I basically look at it as stocks. But Bitcoin in itself is a store of value. It stays strong, it stays true, which is why a lot of these people that you listen to on YouTube continue to tell you that if you put a large part of your portfolio in Bitcoin, you will be okay. And you take advantage of these dips, which is right now. If you have money to put in, take advantage of the dips right now. It is undervalued, super important to do so. I hope that helps to explain kind of the stock to flow model chart and kind of where it's going, why I think we're basically at a bottom at this point. If it breaks the 30K mark, I don't think it'll last more than a couple weeks. I think we'll stay, like I said in my original video, I think we'll consolidate for, basically all summer. But we'll be on a slow rise, so I think we could hit the 48K mark, but I honestly don't think we'll break our all-time high until at least August of 60K. That's just my thought, and I'll go back to that over here. So if I'll go to the daily, make it easier on us here. Whoop. Okay. The reason why I think that, I mean, this is September. I think we'll get a rush a little bit earlier, but that's why I think we're basically going to consolidate. We might hit the 40 mark, might go up to 48K because the trend line brings us there, which is why I have these trend lines. I know it's a dirty chart here, but I like having these lines here because it gives me multiple options. And the thing is, you don't want to think about crypto as a trading asset at this point, especially right now. There is no market structure. So focus on the long-term investment of cryptocurrency as a whole. So that is the stock to flow model for you guys. I gave you a couple indicators and options as to why I think we are where we're at. If you have money, buy now. You'll literally be patting yourself on the ass. In 6 months, when Bitcoin's over 100K, when we're rising. Plan B actually, with the stock to flow model, predicted 288K. I think that's a little too much, but as you can even see on the chart, we hit this consolidation phase. We'll have a little rise, likely to the 40 to 50K mark at some point. But I just wanted to explain the stock to flow model a little bit for you guys right now, so it makes a little sense. I know a lot of people are bringing it up, but as always, make sure you check out a couple. I will also come out with a video of why you should only be consuming a few content creators information, because everyone is just feeding the same thing over and over. You're wasting your time. Do your own research at some point. But yeah, Benjamin Cohen mentioned the stock to flow model, Crypto Banter. They do fundamentals and tech analysis as well on their side. Raoul Paul talks about the stock to flow model in quite a few podcasts and interviews. Listen to Pompliano's podcast. He's got a lot of different people from different areas of the space. It's going to allow you to understand different areas of crypto as well. You might not understand what the hell they're talking about, but it'll give you an idea of what things mean, and you'll start putting the dots together. So, again, Rip Squad, appreciate you guys coming in. I'll continue to feed some information. I want to make things as transparent as possible. We are degens out here. I want to make things easy. Investing's a hard game, but if you can explain things easy compared to what we already know today, that's kind of my plan. So feel free to keep tuning in. Comment what you think. I'll comment back. I'll let you know maybe some ideas as well. Let me know what you guys want to learn a little bit, maybe things that are a little confusing, and I'll put in some videos for you. So take care. Be a degen, have a little fun, but be smart. Welcome to the Rip Squad. I'm out.